Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, November 19th, 2021. Just one last reminder, I'll be out of town next week on vacation, so post will be light, if any, and then I'll pick things up when I get back, either Sunday evening or first thing on Monday. All right, now I may get another video or some other posts out today. There's just, a lot of things I'm watching, a lot of things I'm trading, very diversified right now. But things move quick, so I want to do updates. I'm going to start out here with the cryptos. Been short and bearish cryptos lately, but looking like a potential bounce could be setting up here. We have positive or aka bullish divergences on Bitcoin. This is the chart of the Bitcoin futures, BRR, that I've been highlighting, hourly candlesticks. And so the case for top was this big divergent high right here. We had a series of divergent highs, with the most recent right here, and then we went on to break both the uptrend line and the 64,379 price support, back tested, and that set up this trade. I had this was initially my what I called my minimum preferred swing target, and that was hit, and we bounced there. Then I told you this was my final target, near-term target, and we reversed just shy of it. But the reason I want to do the update is we do have this nice, clean, positive divergence. Now, I think one of two things are going to happen. Can't say for sure which one, but we have bounced back to that 58,315 resistance. Remember, we had a lot of reactions there. 1, 2, 3 distinct reactions there, and then when we broke it, it was impulsive. We had a quick back test. Here, you probably have to zoom in tighter. Before I zoom in, let me show you how it was support there, it was resistance there. Once that resistance was broken, it was support again, so support. And now we bounced back to it. So I'd almost have to put about equal odds on this scenario here. We're bouncing back to it. That line could actually be moved up. We'll just say it's about 58,315 up to about 58,538 right there, 540, because those reactions were a little bit above that level. So here, I'll put a second line. Sometimes I call it a support or resistance zone when you have a range of resistance. So that's it. Okay, so now you have the positive divergence. That doesn't guarantee a rally, but it certainly quite often is a precursor to a trend change. And one of two things can happen now. We've already had a quick back test of it after we broke down. We may thrust down and hit that final target. There's still a decent chance of that. Again, I wish I could give you better than 50-50 odds, so trade it as you like, because we reversed a little shy of my target. Usually my targets are hit, and then you get a reversal. And that one hasn't yet been hit, but there's a positive divergence. So again, do you want to stay long in case the move is over? Sometimes you reverse shy of a resistance, especially if a lot of eyes are looking at that or support level in this case, and you could run up. And the same targets on the way down now become resistance or potential targets on the way up. So there it is. Whether we go up or down, have one more thrust down, we're going to have, if we get another thrust down and it happens soon, as in today, maybe over the weekend, we're going to have positive divergence in place still. If the divergence is taken out, there's a potential for a much larger drop. But as of now, like I said, these bullish divergences, I would say this is, I think we either have one leg down, hit that level, and then bounce, or we bounce from here, and at least there's a tradable correction or tradable bounce to be made, and that's Bitcoin. Also like to look at Ethereum as well. I'm going to pull that chart up here. Give me 1 second. Here it is. ETH. This is the actual Ethereum crypto. These are not futures. This is the crypto itself. And we had a nice clean uptrend line. There you had divergence, your big bearish rising wedge, everything I like to see. Hourly chart right here. You broke down. We walked lower. And see, just like Bitcoin, I have a good support just below. It's about 38.9550 on Ethereum. And we reversed a little shy of that. Again, sometimes if a level is very obvious and there's a lot of people chomping at the bit, and we all know that, whether you're a big crypto fan or if you're not, you know people that are. Some people are just fanatics about crypto and think it's going to the moon and just going to keep going up forever. And who knows? It's been certainly been a profitable trade over the last few years. There's no arguing that. All right, so let's get away from that. It's going to do what it's going to do. And my point is that maybe the buyers are stepping in early. However, just like Bitcoin, it's almost an identical chart. You have pretty good resistance that we're testing now, and we could get that one last thrust down. So consider it a setup, if you will. If you have no position and you get that thrust down, you still have the divergence. You could take a shot at a long there with a stop somewhat below and low enough to allow for a little whipsaw move down below there. But that also may be the end of the run. So if you're short, keep that in mind. Before the next leg up, or let's say a rally up here at about that 440.92. So that's it. I wanted to share my thoughts there that we may reverse just shy of those targets that are just below, or we may go down and hit them. And if so, and the divergences are still intact, we'll probably get a tradable bounce off there. So that would be a setup or an actionable trade now if you wanted to jump in. Ideally, it would have been not ideal right now because you're running up to resistance, so you don't really take a long position just below resistance. Maybe on a pullback. Okay, and if I wasn't, juggling so many balls up in the air right now, trade ideas, and that's what I like to do, just spread it out, diversified sectors, different asset classes, uncorrelated things. In any given day, you do that, and you have a diversified portfolio of, 10 or more positions. A couple are going to be down in any given point in time, and hopefully you'll have more up. So this one, I did an update this morning. Point being, if I could get individual charts out every morning to you guys, I would. It would take me hours to just make, take the screenshots, do the annotations, upload the charts, compose my notes, and get a post out on each and every one. So this one I did because I did the video yesterday, and it really of the stock market right now, again, as I told you yesterday, these I think are two of the most bearish sectors, those with the most bearish technical posture. Don't confuse bearish with something in an uptrend. Something might be at all-time high, and I might say it has a bearish technical posture. It might have, divergences, nice setup with trend lines well below, or just below, and horizontal levels, and that was the case and still is with XLF. Again, it was all in the video yesterday, so I'm not going to go into a lot of details. I just wanted to do an update and say, look, right now it's testing that 38.90-ish support right there. It was almost just a hair above this previous major reaction high. That's when we had a short on it back here on a break of that. We went down, hit my first target to the button, hit it again, and then rallied. And then 1, 2, 3, 4 checks at that level. Broke out, right? And so on face value, that's very bullish, right? And it still is. It's a breakout. Anytime you have a breakout to new all-time highs, especially a breakout above well-defined resistance, even better. In other words, you might have had one high there and then gone up, made a new high. That's a pretty powerful breakout. And so, well, Randy, why you want to short the financials? Well, again, it's my expectation. Sometimes I, try to predict what will happen before it actually happens, and that's what I think will happen. There is a good chance of breakdown. And the thing about it, I started building position in this yesterday, and when will I add to it? If that goes, you take out the trend line in that 38.90, that's a pretty powerful sell signal. It's a false break. It means that the breakout has failed. And that's a pretty powerful bearish event. When you have a long side or bullish breakout fail, I think we could walk our way down. And probably, again, if the market starts to roll over, I think there's no problem going on to hit the second and third targets I laid out there. So there's the update. I just want to give you, we're right there now. If you're bullish on the financials, you buy right now. Why? Because you're getting a back test. You broke out. This is the first back test of the breakout, and you're pulling back to long-term uptrend line resistance. Look how well defined and how long and powerful that uptrend line is. So, again, if you're bullish on the market and the financials, I cannot see why you wouldn't be stepping in here. You have a stop somewhat below. If you're looking the other way, very contrary trade, you can either start a position. I would not go to a full position, not at all. We're at support right now. If anything, now at this point in time, if you didn't take it yesterday, just wait till you get a solid breakdown, and then or just wait, hold off for the breakdown. Then you can take a position or add to a position, and then try to swing down these targets there. All right, enough on that. I'll do an update. Again, the broad market is holding up, but the key, if you want to beat the market, you need to go short the most bearish sectors and or individual stocks, and at the same time you can be long the most bullish sectors and individual stocks. And as far as the other one, I think that is set up for a nice drop. As I told you yesterday, is XLE, and there it is. And then again, this is why I thought it was objective yesterday with ExxonMobil at resistance. If you were just a conventional trader and you were looking at XLE, you say, no, I'm not going to short XLE because it's at support. But well, as anticipated, the breakdown happened. We're down 3.5% today, and again, the case was made with the big dog ExxonMobil at resistance, and so what happened is those that were holding off for a little more evidence, a little more solid break, they missed an objective entry today. There was a gap down. However, if you started a position yesterday, you can comfortably add to it because you're profitable. So even if you get a kickback right now, see, here's what happens. If you short a 3.5% gap down, and remember, XOP, well, I'll get to that in a second, but if you short this and you get a little snapback rally to backtest the level, even though there's no guarantee the backtest will contain any bounce, that would be your next objective level. Well, you're immediately going to be underwater. And people don't like that in a trade. So if you already had a position, you can add to it here. If you go back to this level, well, guess what? You're about close to break even, at least not that much more underwater. And what tends to happen in these kind of breakdowns, not always, but when you gap down, you have two types of breakdowns. You can either go through their intraday and keep on going and gradually go down, but the gap downs, I like them because they tend to leave, what they do is they trap longs. Longs that were in here and might have had a relatively tight stop are now trapped, and if they're doing manual stops, well, they don't want to sell out down 3.5%. They're going to wait for this. They want that. And then what happens, the market usually doesn't give them that. Likewise, those shorts that wanted to short break down but didn't see enough evidence, they want to see this. And they may get that. And, it could be more, but the market tends to deny those people that perfect entry like that in the case of a gap, and then you can just keep going down. So either way, let's not overthink it. Right now, it is a additional confirmation, if you will, or another objective short entry. Again, is it ideal because it gapped down 3.5%? No, but it's certainly objective because that's an impulsive breakdown. And unless that breakdown fails with a move solidly back above the 57 level, then it is puts the energy sector on a sell signal. And then XOP. That one's down. Like I said, you get more juice, if you will, when you trade the subsectors, I call them. XLE is big energy. You have your Chevron, Texaco, ConocoPhillips, ExxonMobil. Then you go down into this, and this one actually has those two. XOP does have ExxonMobil and Chevron. Texaco is just, and ConocoPhillips. They're just smaller weightings in there. They're not as top heavy. And XES is the other one. You get even usually more bang for your buck there. But with XOP, I like it because they have that inverse ETF I mentioned yesterday, DRIP, and now DRIP is up almost 9%. And again, looking good. So I give you targets today. Let's not spend any more time on that. You have that static chart, and then like I say, you get more bang for your buck over XLE if you trade this one as well, XES, and you can see it's down almost 5% today. So there it is, and energy stocks looking kind of toppy, with crude oil at 7-year highs, right off 7-year highs. What's going on here with the oil and gas equipment services sector? Looks like a little head and shoulders pattern potentially there, because this would be your head. That's the highest point. Left shoulder right there, maybe a right shoulder. Either way, again, it's telling you something here. There's divergence between the price of oil and these companies. They peaked back here in May, and have been moving lower, stair-stepping lower since. You have a lower low right there, took out that previous low, and then you had a lower high right here. So what will be the early makings, or well, we have the early makings of an uptrend, but what will help confirm it is if and when we take out this previous reaction low. And these are old levels on the chart. I've had them here, and I still think they come into play. So that'd be your target, about 39.74 in XES. And then just to show you, here's USO crude oil, which just recently put in a top, but is also, you zoom out here, USO, look at that big old gap. That's the most significant gap in oil maybe since I've been trading for decades now. That's a huge gap. We back tested several times, and that's exactly where USO failed. And now it's starting to crack the trend line right now. There's our primary uptrend line. We had one little whipsaw right here, went back above it. So if you exclude that, you have enough distinct reactions to help validate the trend line. And zoom on in, we're starting to crack it. So looks like more downside. That's 51.70 would be your first target in USO. And again, use this as a proxy. You know, the XLE and XOP and DRIP trades, they're probably not going to play out, at least not very much, unless oil does this. If oil happens to keep going up, it's going to be a tailwind for the energy sector, regardless of Biden trying to blame high oil prices on the oil companies now. That's ridiculous in my opinion, but let's move on. You know, I just want to do an update, and I have given you updates on the cannabis sector, cannabis stocks. When I highlighted them last week as bullish, I said there was work to be done. I did an update that next morning before the market opened, said the day is very young, hadn't even started. They were rallying at that point pre-market, but again, I followed up. They failed. They all closed red that day and have been nothing but red since. So there was absolutely zero follow-up, zero confirmation, zero reason to add to those positions. And if anything, if you're in those at this point, look, the bullish case is still there. Again, sometimes you break out and run, sometimes you break out, there's your downtrend line, you come in and back test and then run. So, you know, again, first of all, it was never an all-in. It was only an initial starter, at least for me. And if you're in those still, consider stops. Again, it's all going to be relative and commensurate to where you think things are going, where your target is. You know, if you're targeting this move, you can allow a wider stop, you know, up to that 17 or 1880 level. If you were only looking for a move up to that $17 resistance level, then you'd want a tighter. You probably already stopped out. But again, the case is still there, the potential for a rally, positive divergence and all that. And again, I'm just using the sector ETF. I just not enough time in this video to go through each or even a bunch of the individual ones. Just want to kind of update that. So that's kind of still on standby, on watch, and we just haven't had the follow through. In fact, we had some pretty impulsive selling since that breakout recently. So we'll keep an eye on them. I'll continue to update them. It'll have to obviously be once I get back week after next, but just want to share my thoughts there. And what else do I have for you? Gold, silver. You know my thoughts. I talk about gold and silver almost every day, hanging in there. And again, I just wanted to highlight how well they've held up. This is gold. You know, despite the plunge in the euro. You know, I talk about trying to align my bullish or bearish outlook for the metals with, you know, the outlook for the US dollar and the euro. Well, you know, I talked about the euro here. Let me show you real quick, which, you know, I'm still bullish on. I believe that, yeah, I'll have to find the international calendar. I believe we have some things coming out of the ECB today. Christine Lagarde, I think, speaks. Either way, and that may be the catalyst for the euro. But the euro is still setting up. I told you yesterday it looks good for either a pure play long. But here's what I wanted to talk about. The euro's had a, you know, with the hot numbers and the CPI in the U.S. coming out, sharply increasing the chances of rate hikes in the U.S. or more importantly, moving up the dot plot, if you will. That big drop in the euro, well, that should have knocked the snot out of gold and silver, but it didn't. So to me, that is bullish. The fact, I've been kind of near term looking for maybe some near term weakness in the metals, which is exactly what we had. It's been so far very muted. So now imagine if we get a tailwind in the metals with the euro rallying up to my targets. I think we're going to bounce up here to at least that 114.41 and quite likely that 115.45 level. Should we get that, that should certainly help gold and silver. So again, gold, divergent high, trendline break, everything you'd want to see that normally should ascend it, especially with the euro plunging, should ascend it a lot lower. So far, anything can happen going forward. It's held up, and the correction, if you will, has just been in a form of consolidation, just moving around sideways. So that's that. Silver, same thing. You had a little 60-minute divergent high, trend line break, but it's hanging in there, holding the very first and minor support level, or a decent support level. It's not minor support; it's pretty good support, 24,867. So again, maybe the euro doesn't take off here. Maybe I'm wrong on that. We come down, and if we do, nothing's going to change my longer to intermediate term bullish outlook unless we start breaking these levels here, this one and then that one, and more importantly in gold as well. So as of now, looking good. And I think I've made my thoughts pretty clear on that, that if you're not an active trader, just ride out any weakness, because you never know when the next leg up is going to be. But it could come this afternoon. We could start to rally, depending on what comes out of the ECB. All right, next up would be Treasuries. Still liking the Treasuries for near term. However, we've hit some resistance levels, so targets actually. So I can just tell you I took some profits today, just before the video, or earlier this morning actually, before the market opened, that is. But because we had ZB right here, that's that target I had, 161.236. We had a divergent low. That's a nice trade. I can't, my visibility going forward is not, in other words, that's the easy money I think has been made. Treasuries could certainly work higher based on those divergences, but look, there's some pretty good, that's good resistance there. There's pretty decent resistance. There's a lot of overhead supply in Treasuries, so I think it could be a grind around trade, even if it is going to move higher. So to me, that's not worth it. I'll get out, deploy those funds elsewhere. So that's ZB, and I also gave you ZN, the 10-year. There it is. The 10-year hit that 131-ish target right there. Remember, always sell before the actual resistance level you're targeting. And so we're still just below it. You could still exit this one, or again, if you're holding out for more, there's certainly the possibility. That's a divergent low, and we've only moved up that much. Last time we had a divergent low, we went up this much. And, we're coming off a downtrend. So anywho, I just wanted to mention that I'm kind of cooled off on those near term, maybe take some profits there depending on what you're looking for, or stay if you want to stay diversified. This is probably, well, it is one of my favorites. There's a little less risk in this one than ZN and ZB. Those are the 10 and 30-year bonds. This is the 5-year bond, ZF, futures, of course. So you had this positive divergence right here, this divergent low. So that's really the divergence line I should be measuring. And then you had the breakout right here recently. And these are your potential targets. And the reason this one might have more to go is, and I've covered this in the past, look at the 5-year yield. Remember, the yield is going to be an inverse to the bond prices. When you trade the futures here, you're buying the bond. Those are the bond prices. So here's that 5-year. And if you guys remember, I put a trade on it here, a long on the 5-year back there, based on the fact we were very close and we had the last bullish divergence I just showed you on those futures. Well, let me show you once again right here. So here I highlighted ZF, the 5-year is a long, went up there, hit that 122, it was a good target, 122, 144, and we had divergent high. That was a good, best place in my opinion, take profits. And then back here we set up again, and that's actually what I was said it was very likely back then when we took this one that we maybe go down. I said because we reversed A little too shy of that 1297. That's the big level to me. It was important resistance, and that's exactly what happened. So I outlined a scenario that we might go back, hit the trend line, come up closer, and then actually tag that level. And we have, for all intents and purposes, now hit it close enough. I mean, the high yesterday, 1283. That's a lot closer, and so that is actually could set the stage, especially if this trend line's taken out now, for a much bigger drop back down here to 920 on the yield on the 5-year. That would most likely or could correlate with a drop in the market. Maybe, maybe not, or maybe just certain sectors like the financials or energy stocks get the institutions a little skittish. And with everything going on with rates right now, I'll tell you, if I ran a big pension plan or hedge fund, I'd probably be more apt to put my money in a flight to safety into the shorter term treasuries because there's less interest rate risk. So we'll see. I don't know, maybe the institutions are thinking different, but if you go into the long bond, it's much more rate sensitive. So if you get in at the wrong time, it's going to drop more. So there's the 5-year, and again, a swing down to 920 on yields, which is 9.2% on the I'm sorry, 0.92% on the 5-year. Would be a catalyst for a rally in the 5-year bond prices. So, if you're going to trade ZF, or if you're in it, you're going to swing it, wait, or you can even add to it on a break of the trend line, a solid break of the trend line, and then you'll want to use price resistance on ZF and correlate that with price support or support here on the yield, and that's where you'd want to exit that trade. And the last one, I'll wrap it up here. Just a quick update on coffee. I mentioned that day before yesterday, I think. First is a setup or an objective short entry. Take a starter position. Then we had a sell signal yesterday with a breakdown of the 60-minute trend line. And I wanted to do the update because we are back testing. So this is another objective short entry. You either short a breakdown or a back test, and that's it. So this back test, although it's a marginal new high, it's only simply extended the divergences that were already in place at the previous high, and they're even more pronounced now. So that's it. Objective short on KC, coffee futures, or JO, the ETN. First target still 223.50-ish on actual support levels, and then 214.90, and quite likely, I think we can work our way down to these longer term targets. So something like that. Okay, so a lot of updates and just right at 27 minutes, so we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.